Hello everyone, welcome to our channel. This is the first part to our 5-part series covering basics of technical analysis. In this part, we are going to discuss about candlestick charts. So let's get started. Every candle is built on 4 data points, namely open, high, low, and close. The distance between open to close is known as body of the candle. In case closing price is greater than opening price, the body is green, or in case the closing price is less than opening price, the body is red. The thin lines appearing above open or close are known as shadows, wicks, or tails. The distance between opening price or closing price to highest point is known as upper shadow or upper wick, and the distance between lowest point to open or close is known as lower shadow or lower tail. Now we will look at two basic principles, that is, when demand is greater than supply, price increases, and when supply is greater than demand, price decreases. Now we will discuss how these principles can be applied to a candle. Before we go ahead, I want to stress on the fact that we are assessing the strength of demand or supply on a candle in isolation. It's important to know that other parameters are necessary to get an overall picture. Now let us take an example of a well-known hammer candlestick pattern. This is an example of a classic candle where demand exceeds supply. So let us discuss the structure of hammer pattern. We can see that it has a small real body on the upper end of the trading range, a long lower shadow that is at least twice the amount of length of the body, and very little to no upper shadow. So let us mark the open and close on these candles. So since this is a green candle, we have closing price which is greater than opening price. And since this is a red candle, we have closing price that is less than opening price. We can see that at the beginning, sellers were pushing prices down. That is, supply was greater than demand, due to which prices were falling. But then something happened. Buyers stepped in aggressively, causing increase in demand. And this massive surge of demand swallowed up all the supply, driving the prices back up. This shows that by the end of this session, demand, overall demand was greater than supply. Now, there are multiple candlestick patterns. However, instead of diving into individual candlestick patterns, I have classified basic candlesticks into demand or supply candles. That is, when demand is stronger than supply, we will name it as a demand candle, and when supply is stronger than demand, we will name it as a supply candle. You can take any candlestick pattern and it will be either a demand or supply or indecision candle. This will become clearer as we progress in this video. Here are few examples of demand and supply candles. Look at this candle. We can see that buyers or demand was in control. Therefore, we have classified this as a demand candle. Now look at this second candle. You can see that prices or the sellers had driven down the prices aggressively. However, something happened. Buyers stepped in and that demand caused prices to increase again. Therefore, by the end of this session, we can say that buyers or demand was in control. Now, let us look at these two candles. We have already discussed this is nothing but a hammer candle. Now, let us look at supply candles. Check this candle. We can see that sellers or supply was in control. Therefore, we have classified this as a supply candle. Now, let us look at the second candle. Price was increasing aggressively, that is, buyers were in control. But then something happened at those higher prices and a strong wave of supply came in. So therefore, by the end of this session, we can classify that the supply or sellers were in control, and therefore we have classified this as a supply candle. Now here, a long upper shadow means supply stepped in, sellers rejected those higher prices. The third and fourth candle are nothing but inverted hammer candles. Now, let us take another example of a candlestick chart pattern. This is a 2-day candlestick pattern and it's known as bullish engulfing pattern. Day 1 is a red candle which means that opening price is greater than closing price, or it means that sellers are in control on day 1. Day 2 is a green candle, which means that closing price is greater than opening price, which means buyers are in control. The relationship between these two candles is that the opening price of day 2 is less than closing price of day 1, and the closing price of day 2 is greater than opening price of day 1. Now this means that all the supply created here on day 1 was engulfed by the demand created on the second day, and therefore the name bullish engulfing pattern. Now let's look at an interesting concept of candlestick math. As I mentioned earlier, we can take any candlestick pattern and classify it as a single demand or supply candle. This will become clear now. Let's discuss about bullish engulfing pattern itself. So if we want to print only a single candlestick of these 2 days, how would it look? We'll plot a single candlestick as follows. We'll take opening price of day 1, closing price of day 2, highest price in couple of days, and lowest price in couple of days. We can see that a hammer candle is formed, denoting demand is greater than supply. Now let us revisit the demand and supply candles slide. What I want to highlight here is that if we take any candlestick pattern, one of these candles would be printed by doing candlestick math. However, I want to share that I have not included a couple of candles to avoid confusion at this point of time. To conclude, I want to emphasize again that right now we have only discussed about candlestick and identified the strength of demand or supply in isolation. As mentioned earlier, we will be discussing about other parameters and how to incorporate them in with candlesticks in next videos. If this video added value, support the channel with like. Further, kindly share this video and subscribe to our channel and click on the bell icon to get notifications of our upcoming videos. Further, kindly let me know which pattern should we break down next. Let me know in the comment section below.